Oil prices are edging higher after a 4-week streak of losses. Now, this comes ahead of an OPEC Plus meeting this weekend. The big question, will members, including Saudi Arabia and Russia, commit to further supply cuts? Well, according to a report from Reuters, the cartel's members are considering it. So what can we expect from the oil markets ahead of the meeting? For more on this, Michele Schneider, MarketGauge.com chief strategist, is here. Good to see you, Mish. So been in an interesting time here. I know in your last note you had oil the new gold buy when there's blood in the street. Does that still hold ahead of this OPEC Plus meeting?
Well, certainly it was the case last week, Rochelle, when everybody got so negative on the oil because there was a 20% drop. And I think that's what's so dangerous when you talk about any commodity, particularly over the last few years when commodities have become all the rage, is not understanding the volatility that commodities bring to the table. And 20% corrections are not unusual. Volatility is not unusual. So the reason why I mentioned it as the new gold is because what we've seen with gold recently was also a huge drop, about 25%. Everyone left it for dead. And then whammo, it's when there's blood in the streets, gold continues to then get a bid. And the same exact thing happens. So there's fundamental reasons for why the oil is up here. What we don't know yet is those same fundamental reasons going to be a reason why we can get back up over $80 to even $90 a barrel. We could just be ranging right here.
And what would that range look like? I mean, as we look at WTI right now, it's currently at $77.86 a barrel there. But we know at one point we were looking at expectations of $100 to $150 a barrel by some calls by the beginning of next year. How do you see the oil market playing out from here?
Well, there's so many factors, so let's talk about it. You mentioned OPEC Plus at the beginning, and that's clearly going to be a factor. There's BRICS. There's still a lot of talk out there about pricing oil in something else other than U.S. currency. That, of course, would have its own implication. There was obviously stress because people thought last week we were heading into a recession, labor going down, housing going down, some of the manufacturing numbers not showing so robust. People were saying the demand is done. And of course, gas prices have come down a lot too. That's also been a weather factor and huge supply there. But the supply in oil is still iffy besides the OPEC. We also have the floating storage rates, and that's how much crude is actually on floating storages throughout the seas, is at a 2 3/4 year low. But I think one of the most important things to keep your eye on here in terms of what's going to happen with oil prices is the SPR. And what's right now, the U.S. has not necessarily refilled what they were supposed to. They were looking at $70 a barrel. It got down to 72, which is why I thought it might turn. But also they're looking at sour crude, and people keep talking about WTI and sweet crude, but sour crude is really what is essential in heating oil and in diesel. And there isn't a lot of that. So we have these, outside of the geopolitical risk, obviously, we have these other factors that could keep oil at least trading, I'd say, above 70. And maybe we can get to 100 if something more catastrophic happens, but I'm not looking for big moves there. To me, the future of inflation is coming more from food.
So then for people who are interested in investing in oil, what mindset should they have? Because you mentioned the volatility and expectations there.
Well, it's kind of similar to how you want to invest maybe in gold, in that you want to have a piece of exposure to at the energy markets and the oil markets with this dip. It gave a great buy opportunity with a lot smaller risk. But I wouldn't necessarily think that it's the greatest place to be right now. Like I said, we really have pivoted more into the whole food space and some industrial metals. But we have actually a position in oil right now. It's a relatively small position. And we have a stop. So that's how you have to play it. If the oil breaks down under $70 a barrel, that would be the caution. If it holds here, right now it's at 77, so it's a little bit rich to the risk versus the reward. But you get any kind of dip closer to 74, 75, I take a shot. And I would look at what happens at 80, and then 80 to 90 can happen very quickly.
And some of the commodities you like in the food space, and I've been tracking what we've been seeing with cocoa prices especially. What are some of the ones that you think people aren't paying enough attention to?
Well, you mentioned cocoa, so that went as high that it hasn't been since 1978. So think about that. There's been a lot of comparisons about the 70s and currently, and that's a great classic example of one. Sugar, people, there's reports about sugar out there, but to me, sugar is still the key barometer of what we can expect with inflation going forward. And so right now, sugar's been trading over 27 cents a pound, and it's not taken out its recent highs, really kind of where it's trading at right now. And I think if that starts to break out, that would give us another opportunity. If you, again, follow the 70s, by 78, 79, sugar was up at 40, 45 cents a pound. And soybeans are another one. We had a good crop here in the US, but Argentina and Brazil are having tremendous drought. And now with a new president in Argentina, it's going to be interesting to see how much he wants to move the economy. And so I think soybeans and the whole DBA agricultural ETF, those are the areas that I'd be looking at mostly.
Appreciate your insights as always. Great having you on, Mish. Michele Schneider, MarketGauge.com Chief Strategist. Thank you so much and happy holidays.
Happy holidays, Rochelle.